Hey, welcome to the show. And it's the 3rd of February. And I am here with Axel Rudolph. Axel, how are you?
I'm all right. It's been busy.
Yes, you had a webinar last night. How did that go?
Yeah, fine. So if anybody wants to watch this webinar, you can watch it online. We have the recording of it. But yes, I mean, we were worried about escalation. We are seeing escalation today, and markets are coming off. And it'll be interesting to see whether US markets, which hardly reacted, to be honest, are going to follow European and Asian markets suit and fall. So yeah, interesting day ahead.
It is, of course, day 4 and currently just summarizing some of the reports that you've seen, possibly overnight if you're watching it like myself. The US has struck more than 1,250 targets. This is according to reports by and large by the mainstream media. And Trump is also vowing bigger, more shock and awe strikes after the US I believe it was the embassy was hit by a drone in Riyadh. More details. We're still scouring for more details, more confirmations out there, because there's been a lot of smoke and mirrors, a lot of even at Reuters, where I used to work, there is a lot of concern that it's very hard to try and confirm these numbers at the moment. Strait of Hormuz, that's the other one that we're watching as well.
Well, that's even more important because basically that's where all our oil, well, not all of it, but 20% of our LNG comes from. In Europe, I think it's 15%, but globally, 20% has to go through the Strait of Hormuz, and that is obviously very important. We even have coal prices affected now, and obviously the oil price, again, up 4% earlier today. Brent is now trading at $80 per barrel. So, yeah, but we'll look at that in a minute. Let's start off with the FTSE 100 and look at the losers.
Yeah, they're all down.
Yeah, what we can see here, once again, it's miners, which is kind of interesting because the gold price did rise this morning and held pretty well, but silver price has come off a bit yesterday. And you can see here the miners on my screen are all down. And then we've got Standard Life. A bank here, the financials not doing well either, Standard Chartered, Lloyds Bank, etc. So that's not surprising because now the expectation of the Fed cutting rates have actually been pushed back from July to September as we worry about this impact of higher oil and gas prices on inflation.
Don't forget as well, we have had miners marching higher recently, so this might just be some sort of taking of profits there. Also looking across the board, we've got some defensive names also lower there. We've got National Grid down more than 2%, banks, as Axel was mentioning, and also Halma is down 1.7, Lloyds is down 1.6, just peeking over because there's more losers there, but we'll peek over to see where the winners are. Smith and Nephew, top of the pops there, up almost 2%. And BP still heading higher, up 1.7%. Of course, we saw many oil majors up yesterday. Of course, the Strait of Hormuz is the key to this. The other interesting thing, I was crunching data yesterday. Many out there don't realize that that region is so key for fertilizers. And so CF Industries, if you're talking about nitrogen-based fertilizers, these are some key ones to look out for if you think this is going to be protracted, more drawn out. What was the mood music like yesterday at the webinar?
Well, most people were just a bit worried and quite surprised that US markets didn't react. I mean, when we were doing the webinar, except the Dow, everything else was actually in positive territory, which is kind of crazy when you think that European markets were down between 1.5% and 2%. But as I said, that might change today. So yeah, do just be very careful. And what Chris and I basically did is, obviously nobody knows what's going to happen next. But we did warn about the main technical levels where you need to put your stop losses if you're sort of longer term investor. For example, on equity markets, for me, it's the 23rd of February low. We're testing that this morning on the DAX. So we'll look at that later on perhaps. But yeah, if we fall through those lows, we may well slip quite a bit further towards the November lows we saw last year. So that'd be very interesting if that were to happen.
And everyone that's coming onto the chat right now, listening in to this live cast, good morning, all of you. We see you. Axel and I are here, and we can see all your comments coming in. Of course, the big other things to keep an eye on today: U.S.-China trade talks as well. Besant and Hurley Feng meeting in Paris mid-March ahead of the Trump and Xi summit. Be interesting to see what they come up with and whether there's any tariff threat rollback. We also have Citi and Barclays singling out the UK market for commodity and defensive tilt. I mean, this is the interesting thing. I had a conversation with a client yesterday, and client was saying that they, on principle, they don't invest in defense, which I completely get. But actually, if you're in a FTSE tracker, you are exposed in some way, in a, well, you could argue a big way as well. But also, if this continues, we've seen many ETFs out there and ETF providers coming up with, for example, Han ETF is launching a drone ETF this week. There's also been an ETF focusing on Asian geopolitics moving ahead. Do you see this as a larger trend, Axel?
Well, that's the big question. I mean, we'll see. I mean, if it is a reversal here, it may actually turn into a bear market, which I've been, waiting for since last year, but I got it completely wrong last year, simply because we've got the midterm elections. And right now, I'm not even sure whether Donald Trump will try his best not to have those. I mean, who knows in this environment what's going on? And the problem with wars is, as Chris said yesterday in the webinar, that when you start them, you never know when they finish and how they end. So, what we don't want to see is escalation, and we are seeing that at the moment. Now, we're right at the beginning, and maybe it'll just last a few weeks, as Donald Trump has said yesterday. But maybe it'll last far, far longer, and we have a similar situation to what we saw in Afghanistan and in Iraq. And if that's the case, we will probably get a far bigger move to the downside than what we've seen so far. So be prepared, have guaranteed stop losses in place. Look at the markets. We were talking about the DAX. If you look at my chart, you can see it. We are right now in the process of falling through these lows I just mentioned, going back to late February. And if we were to close below here, what we're forming in that case is, from a technical perspective, a double top. And then if that is the case, that would indicate that the distance from the highest point to the midpoint here can be trajected down to the downside. And as I said, that would take us down to the November lows. So that would be sort of a 5% correction or so. The question then is, if that were to happen, because we've held there, the November lows were made quite close to the lows we saw earlier last year. If they give way, well, then we can really have a bear market. But, that's just projection. At the moment, it's not looking bullish, that's for sure. So just be aware. And the German stock market is obviously not the FTSE. I mean, if you look at the FTSE, you will see that we are coming off our record highs. But again, we are accelerating to the downside. We're now testing the first support here, and we'll see whether we can hold here at these levels we're testing right now. If that isn't the case, maybe this is also a top. But right now, technically, you're still in a long-term uptrend. As you can see here, we have a series of higher highs and higher lows. So don't panic, just be prepared is my message, basically.
Yeah. And make sure risk management is in place. And what I also like, Axel, is, and I've got this in my trading diary, is, you might be tempted to go shopping on the initial reaction, but, keep some of your powder dry, right? Because you don't know how long this might last, whether you have further opportunities ahead if what you've been watching for a long time heads lower. There's no harm in position sizing in. Lots of comments on the chat, some saying that the market doesn't like uncertainty. This war could go on for a year. Another saying, I bought ADEF, the Southeast Asia Defense ETF, prior to this conflict. It has risen. Southeast Asia, of course, a place very close to my heart. I'd like to hope that it doesn't boil over there, but there are, of course, other ETFs as well, like the Indo-Pacific Defense ETF as well. that are starting to gain traction, because the concern is that will be the next point of conflict. Right, let's take a look elsewhere, because we talked about commodities earlier. Oil, of course, heading higher. Net gas, my goodness, that was the star of the energy section late yesterday. Brent is also up 3.7% there. Gold had a bit of a leg up in the previous session, but it's kind of flat right now. And silver is down 2.7%. What's your call on silver? I'm interested, Axel. I am not in silver and haven't gone back in since I sold out before that January crash, because it hit my very tight stop.
Well, I mean, short term, it's topping out again. The question is it going to be similar to what we saw earlier this year, last month, basically, when we had these big red candles, and then we just creep back up again, and then we had another red one, and then we creep back up again. But right now, we're clearly looking less positive than we are on gold. So gold is far more safe haven play than silver is. And yes, I mean, basically here, what I'm seeing is a test of support. I mean, if you can see here, we can draw a support line on there, because we've only got 2 touching points, and we are very close to making this a trend line, because we are, very close to that low we were earlier this morning, and that support line. So maybe that will hold the support, in which case we could go back up again. What you then need to see is a rise above last week's highs for us to head towards the $100 mark. But unless we see that rise, we may slip further. But right now, I'm pretty undecided, to be honest. I mean, if you look at the shorter term trends, we can see here on the hourly chart, we're trying to find support, we're trying to bounce back. But again, we would have to rise above yesterday's highs for me to be more bullish on this.
Taking a look elsewhere on my watch list, and just peeking at defense. Of course, they had an up day, but we're giving some of those gains back today. Rheinmetall down ever so slightly, BAE Systems down 1.5%, and we also have Kinetic down 1.7%. Kinetic, interestingly, was up 3%. Its shares have been downtrod for some time, but they pumped higher yesterday, because they are the ones that make anti-drone systems as well as drones, might I add. Also checking in on some of the luxury names there, because they were lower, quite a few of them yesterday, and they are adding to those losses as well. Kering down 2.6%, Hermes down 1.2%. You look like an Hermes kind of man, Axel.
Well, I'm not, but my wife might be.
Richemont 1.8%. This is why Axel and I are working to pay for our partners' expensive tastes. And also, just peeking across at chip stocks, because chip stocks got a bit of a pounding, and also there is still that concern, right, about AI. But of course, with what's been happening in the Middle East, concerns about growth as well. Thoughts on the chip space?
Well, at the moment, I think the geopoliticals is taking the forefront here. So watch that space more than sort of the fundamentals at the moment. Same with data. Everything's just about the Strait of Hormuz, because if Iran does follow through on its threat of closing it, we are talking about serious problems, and it may actually add to quite a bit of inflation down the line. So let's watch that space. Other than that, I mean, to be quite honest, it's been fascinating last 3, 4, 5 weeks, because we've had semiconductors and chips coming down, then back up again, then down. So it's this risk on, risk off with regards to AI all the time. And it's no longer as bullish as it used to be. I mean, look at NVIDIA earnings. Again, it was probably the 10th in a row beat. Very solid numbers, very positive, yet the share price came down. That's starting to be a new trend. Beforehand, we would then rally, 5-10% every time after earnings. We're no longer seeing that. So the momentum has come out of this very sharp upsurge in semiconductors and chips. So I don't think it's the same trade it used to be 2 or even last year, 2 years or last year ago.
Let's cross over to the airlines now, because EasyJet is down 1.8%. No surprise there. Also, let's have a look at IAG, and no surprise that it's down 2% as well. Those of you that follow us on the show, you'll know that I came out of IAG just after the Christmas period, after taking a nice profit in the end quarter of last year, because I didn't see that that summer enthusiasm was going to last. And of course, Erin and I talk about this a lot on the show. For some reason or other, and this is stuck in our memory for a long, long time, every time there is, I mean, can't say when there is unrest in the Middle East region, but if there were to be unrest, it's always during a holy season or some holy, like Ramadan, right? And so for those of you trading the airline space, this is my personal view, try and steer clear of that season, just because you don't quite know what's happening. And right now, as I'm looking at my filters for you, we've just had news coming in saying the French foreign minister is saying they stand ready to fly French nationals most at risk back. There's some 400,000 French nationals present in the regions affected by the crisis over in the Middle East.
And what's also interesting is that Iran hasn't yet, and I hope they won't, but who knows, sent over thousands of drones in one go to just overcome the defense systems of different countries. But having said that, the psychological impact that we're seeing, for example, Dubai being hit, even though it's debris from shot down drones, is concerning. And the fact that the same has happened in other countries with regards to oil and LNG refineries, and that some of these yesterday were shut down, which is why we saw this over 50% rise in the LNG price in European gas prices. And what's interesting there also is the dynamics in the markets playing out there, because I think gas stocks in Europe were at 31%. Last year, at the same period of the year, they were at 40%. So you had low stocks. Now you've got the Strait of Hormuz not letting LNG gas through at the moment. That accounts for about 15% of the demand from the whole of Europe. And at the same time, you had Americans bidding for LNG because they also need it. So there's a lot of pressure on gas markets at the moment. And that's why we've seen this sharp ascent. Having said all of that, if you look at an LNG chart, and we can do that later on, for example, also, you know, ETF, Dutch gas, it's nothing like the advances we saw in hundreds of percentage terms when we had the Ukraine war start. So yes, we went up 50, 58%, but it wasn't hundreds of percent. So, you know, look at everything in context, go back in your charts and look back years to see where we're at exactly.
Exactly.
Doesn't mean it can't go there, but right now it's well, relatively contained, even though 50% is huge in a day.
Well, that's right. And looking back will give you context and the ability to plan your exit or re-entry in a calm way. We often say here that if you're not doing this in a calm way, chances are you are not doing this right. You don't want to be screaming at your terminal, or the other one is you know that if you're praying for something to turn back in your favor, then you haven't been doing your necessary risk management. Speaking of which, I have a special surprise for everyone sometime today, because it is so hard, it is so difficult. You cannot imagine how difficult it is to pin down these important people. They don't give us we can't ask for timing. Phil Liu has lost a lot of his hair because very often, and Axel will tell you this too, is I get a call. They're flying through, or they have 10, 15 minutes before their next meeting with Brussels. I then get them on the line for our valuable clients and viewers, and we get them on for you. These are very important people, and one person that is the GOAT of the defense space I'm waiting on today is none other than Pauline Neville-Jones. She is a member of the House of Lords and former Minister for Security and Counter-Terrorism. And she has promised to do an interview with us today. So I will give you the time as soon as I can. She's extremely key because not only that, she was also instrumental in negotiating the treaty in Bosnia. But she is also a member of the Quantum Strategic Advisory Board and has been an advisor to not just John Major, but also David Cameron.
Interesting.
So any questions, do pop them here and I will get them asked. Lots of people on the platform also asking questions. Cuts to oil transportation time by half to 15 days from Iran to China. UAE, that's another comment. UAE only has Patriots to cover up to 5 days. By the way, I know it's hard to kind of ascertain what might happen from here on in, but what kind of indications are you looking out for, Axel?
Well, escalation, de-escalation is really the main thing here, and the Strait of Hormuz, but everybody will be watching that. What I found interesting, though, coming back to markets, is cryptocurrencies yesterday, because they did something quite extraordinary. They went up. Bitcoin went up 5%, and yet everything else more or less came down. And that probably had to do with the fact that JP Morgan said buy the dip for equities, which is why probably US equities went higher yesterday, or some of them at least.
No, it started creeping higher from about 3:30, didn't it?
And then
I was watching it.
Cryptocurrencies used that risk-on momentum to also head back towards the highs. And you can see here, excuse me, I've got a frog on my throat. We are retesting this resistance area I've been talking about, and I'll probably write about Bitcoin now, so if you want to read my article later on, you can do so. But yeah, there's this key resistance area which we keep testing, but every time we do so, we come off again. Question is, this time around, are we able to break through this resistance area or not? So watch that space, because Bitcoin, Ether, all of these cryptocurrencies are looking kind of interesting, because in the past what we've seen is the gold price rise and Bitcoin not being this new digital gold, actually coming off instead. Now what we're seeing is the gold price rising, or at least stabilizing, and Bitcoin yesterday did rise more than gold. So who knows what's going on there, but it's interesting.
I can feel Chris smiling smugly as as we talk about this every day, because you know, he's been saying for a long time that he is not a fan of, especially the time when they were calling it digital gold. But, you know, it's interesting. If you ask like 5 people, you get 5 different answers. Another thing that's just come through that is quite interesting is that don't forget there are contrarian indicators that you can watch out for as well. You just need to do some digging. So by that I mean satellite imagery. Also, you know, look at what farmers are doing in the region. That's normally a very good forward indicator. And a lot of comments coming through from France this morning. France saying ready to defend its partners. We haven't got an infill on that just yet. It's just a red sticky, as they call it in the news industry. That just means it's an alert, and it has about 5 minutes to have the first paragraph. So we're still in the red sticky, waiting on comments on that, right? So it's going to be a really busy day. I've got Pauline, hopefully quite soon this morning. What's your day looking like?
Busy.
Any other webinars that we can?
We'll probably do one every Monday now, because of this heightened volatility. So yes, there'll probably be another one next Monday, but we'll announce that pretty soon.
Okay, brilliant. And we'll get that to you as soon as possible. One little nugget as well, because I always believe in practicalities. If you see a swarm of drones, the main thing is to head for the core of whichever building you are in. And on that note, I hope all of you have a great day hunting. Let us know what you are doing, what you are looking at, your watch list. We'd love to hear about that. Slam the like and subscribe button. Any questions for Axel and myself, do put it to ask@ig.com, because it does come directly to me and I'll get it answered for you. Whatever you're doing today, I hope you stack the odds in your favor.